Well, the demand has picked up, and
you'll see the demand has picked up to pre-GST levels?
Even better than that, because even pre-GST, we've had a pretty poor growth pattern as an industry since 2014. And we were seeing the beginning of revival of demand in around September, October of last year, which then was quickly decimated by demonetization.
Sure.
And then, of course, we had a mild recovery in the fourth quarter. Then again, you had the GST come in, so we had a poor first quarter. Now, with those headwinds now being to some extent mitigated, in fact, substantially mitigated, we are seeing restocking happening, and we're also seeing end demand perking up, which is actually the most important thing. But once again, I would caution that we cannot take the sustainability of this demand as a given. There are a couple of headwinds which are coming in. One is, of course, the monsoon is not really as good as what was envisaged even a month ago. The dispersion is poor. You have pockets of excess rain and flooding, and then you have droughts in the others. So it's a pretty average, or perhaps even a below average monsoon, and that's something which we have to take cognizance of. The second thing is that there is a fair amount of distress, as we all know, in terms of the unorganized sector, which provides most of the employment. And if the agri output is also pretty muted, that is a fairly toxic combination which can compress demand. So we have to be a little bit careful before we say that we are completely out of the woods and the demand going forward would be very resilient. So therefore, even if the demand is not very strong, we'll have to look at other levers of growth like market share improvements, et cetera, leveraging our Ayurvedic heritage, for example, which is a very important part of our future strategy.
Do you find the current consumer sentiment also, not so buoyant?
Yeah, I think it is reasonably robust in the rural areas, a little bit more subdued in urban. I think people are waiting and watching, and the consumer confidence levels have dipped a bit. We all know that. Whether it will impact staples consumption, I don't think so, because staples consumption is very resilient. And we've seen pockets when consumer confidence was low, the GDP numbers were low, and we had some of the best growths ever. I think the single most important trigger would be government stimulus to drive consumption.
I want to talk to you about categories where you've had to face heavier taxation because of GST, but you have not yet increased prices, so to speak.
We are doing so as we speak. We have just in the last few days increased the prices of some of our skincare products, Gulabari for example, and some home care like Odonil. These were the two areas, skincare and home care, which were negatively impacted by GST. Rates went up from around 22, 23 to 28. So there has been an element of higher tax. In addition to that, there's been some inflation also which has kicked in. But these price increases are mild. They're really to mitigate the negative impacts of GST and inflation. I suspect aggregate the price increases this year to be very, very nominal. And I don't think we'll be increasing prices beyond 2%. So even though there are signs of inflation coming back, we've seen around 4.5% WPI, fortunately our basket is not very negatively affected. So we are still seeing benign inflation. We don't want to derail the consumption story by taking sharp price increases. At this point in time, it is very, very important for us and for all companies to rebuild the top line, restore consumer confidence in terms of pricing stability, and only then we will have the platform to take up prices perhaps early next year.
Mr. Duggal, a lot of FMCG majors, have said that their last mile stockists are finding it extremely difficult to cope in the new regime. Apparently, they're finding it so difficult to cope that they're quitting the trade altogether.
In our experience, it's really not the last mile stockists which are suffering because of GST. It is really the wholesaler, because we did undergo a very extensive plan of training and giving them the software, putting in some hardware, etc., making sure that they are GST compliant. In any case, they were VAT compliant, so they were a fairly compliant bunch of entities as far as our distributors are concerned. Now, the wholesale is where the compliance levels were always low, and they are struggling now to deal with this whole compliance infrastructure and requirements. So that is where the problems really are centered across. And this is what we call the GT wholesale, general trade wholesale, which is around 25% of our business. So it's a big, big chunk, and even more so in the northern and eastern parts of the country. Now, what we are doing is we are, in a sense, bypassing this channel, going to these super stockist and sub stockist networks, which we've built over the years, which today are around 20% of the total business. And I suspect there will be a sharp trade-off in terms of where our sales happen, away from wholesale and towards the super stockist. And this is really the rural feeders. And this change is already happening. Whether wholesale will rebalance and get back its earlier pole position, or whether it will cede ground to the super stockists, we do not know. So I think the network design and reconfiguration is a huge project. So we've shut down around half a dozen depots, which were the small entities located in the smaller states. But the big network changes are still being under scrutiny in terms of design. And perhaps in the next couple of quarters, we'll start rolling it out.
Your peers have been saying that, the restocking process has not been as fast as one expected it to be. Is that something you have witnessed too? And if the restocking process has not been as great, then how do you expect the impact in the next quarters?
Well, in our case, and this may be a little bit different for different companies, it was really not the trade which destocked. It was our distributors who destocked.
Okay.
And we encouraged the destocking. We did not say that, no, please do not destock. We wanted them to destock. And we lost a lot of sale, particularly in the month of June, when we practically shut down business to our distributors after the 20th of June. But surprisingly enough, the wholesale said, okay, we don't know what's going to happen post GST, and even the retail, so let's stock up now. So their inventories were actually pretty decent. So now what we have also decided is we will not substantially restock distributors, because we will learn to live with a leaner supply chain. This is something which we wanted to do. In a sense, the process of GST has accelerated the downstocking, which we perhaps would have done over the rest of the year.
How much are you looking at boosting your ad spends by?
This year, of course, Q1 was very subdued because there was no point advertising in that scenario. I think Q2 onwards, the ATL spends, the media spends, would perhaps go by around 50 to 20%. I'm talking about the 3 quarters, the balance 3 quarters of the year.
Right.
And for the full year, they would probably trend at around 10 to 12%.
Okay.
But there would be some reduction in the promotional part. So some of the additional spends would be met out of savings from promotions, because we are moving spends from below to above the line as part of the long-term strategy.
Mr. Duggal, can't help but talk about the Patanjali impact across all categories. Do you feel the market is big enough to accommodate everybody? Because if you just look at volumes, they spin a different tale.
Patanjali is a very interesting reference, because the Patanjali impact really happened when the consumption stress was at the highest. So obviously, whatever share they took over from other players, including us. The impact would have been far less had the categories' growths been reasonably good as what they are today. Because the market size is so big, it can accommodate not just one but many Patanjalis. The other positive aspect of Patanjali is it's unveiled the fact that there is a far larger market for Ayurvedic products and traditional Indian products than perhaps was envisaged earlier.
Yeah.
So there's a lot of category expansion which has been done, and a lot of recruitment which has been done from both non-users as well as users of the regular products into Ayurveda. And I think that augurs very well for us, because the recruitment is very hard. And so therefore we can gain out of that.